Hey everyone, we had some big news come out of ZIM Integrated Shipping Management that can partly explain why the stock price is down 15% in the last month. Of course, ZIM stock is down even more for the full year in 2023. So let's take a look at its latest quarterly earnings call transcript to get an understanding of what's going on with ZIM and why the stock price is down.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, despite the war related challenges, ZIM operation and services everywhere, including to and from Israel, are continuing. That's huge news for ZIM stock investors who were not sure if ZIM would continue operating in and around Israel since the attacks on Israel on October 7th. Now, that was a big announcement from ZIM Integrated Shipping. The company also saying that only about 10% of their volumes are imported or exported from Israel. So 90% of its business is not related to Israel. And so that was a bit of reassuring news for ZIM stock investors. So if you've been following ZIM, you know that the 2.5 years of historical financial results of mid 2020 and 2022 led to net income of nearly $10 billion. Those were significant boom times for ZIM Integrated Shipping as people worldwide were spending more time at home since restaurants, theme parks, concerts, and those types of away from home activities were severely limited. People were spending more time at home, shopping for things, and spending their money on things instead of services. And of course, since ZIM ships things around the world, that was great news for ZIM Integrated Shipping, which saw volumes increase substantially and saw prices on shipments increase substantially, and it led to nearly $10 billion of net income for the company throughout those times. That led to a cash balance now of $3 billion for ZIM Integrated Shipping. And that's good that the company kept some of that cash that it earned during those boom times because now the market has reversed. That the opposite is happening. People are now spending more time and money away from home. They're unleashing pent up demand for things like travel, restaurants, bars, concerts, theaters, and on and on. People want to spend money, people want to get out of their houses, and they're not buying things as much anymore. And that's been bad news for ZIM Integrated Shipping. Really bad news. Its profit has collapsed, cash flow has collapsed, and the company saying that the market weakness has extended longer than they had even anticipated. So they were already anticipating a slowdown, a reversal of those boom time trends. But what's happening now in the market is much worse than the company had anticipated. Not very good news here, and certainly not good news for ZIM stock investors. Still, the company is building and transitioning for its long term plans. The company executed their fleet renewal program and secured through a series of charter agreements a total of 46 new built container ships, of which 28 are LNG power. Their fleet will be much younger, more fuel, and cost efficient. That's really good news. This is one way where shipping companies have competitive advantage is by having younger, more fuel and cost efficient ships so that thereby they can charge their customers lower prices or charge their customers the same prices and have better profitability on the bottom line. ZIM is working towards that, and there's more to be said about its optimization of its fleet a little bit later in the video. ZIM also entered into a strategic supply agreement with Shell to secure LNG supply at competitive pricing. That's good news for eventually when the company starts to shift more and more of its shipping with LNG power. Having that secure supply source at competitive pricing will help the company operate efficiently and effectively. I mentioned earlier that I would talk more about the company's transition, and during the 2 year transition period, ZIM's cost base will gradually improve as they continue to make and take delivery of cost effective new build tonnage and redeliver expensive COVID-era charters. Redeliver just means like return existing ships, right? They don't own a significant majority of their ships. They lease them, they charter them. And so when it comes time for renewal, they can either choose to renew or extend that lease or just return those ships. And that's what ZIM is choosing. Now, at the same time as they navigate near-term market challenges, they have taken steps to rationalize their existing capacity whenever possible to minimize the cash burn. In 2023, they have already redelivered 20 charter vessels, and they expect to deliver another 5 vessels back to owners by the end of the year. That's what I've been looking forward to ZIM to do in 2023, as the market has proven to be worse than expected. Prices are down, shipping is down, and so this flexibility that ZIM had to return those vessels was a good option for them to exercise, right? Return some of those ships, shrink your fleet, and thereby reduce your losses on the bottom line because you're shrinking your tonnage, and thereby then it's reducing supply in the market, and hopefully that will help boost pricing in your current vessels. But even if it doesn't, you now have less supply that you need to worry about filling up, and so you don't have to offer discounted rates to fill up those ships. So this is what I think they should be doing, and I'm happy to see management going ahead and executing these returns. But that's not the end of it. They have another 34 vessels up for renewal in 2024, so this will allow them to better align their fleet with current demand levels. So in 2023, they're going to return, it looks like 25 vessels, and then in 2024 another 34 vessels. So in the 2 years, they're returning 59 ships back to the owners, and thereby reducing their costs, reducing their available supply, reducing their pressure to fill those ships and get them filled and make sales to companies to get them filled and transporting things. And if this continues in the year 2025, there will be even more vessels that they can return. So this flexibility that ZIM has is a benefit for the company as it navigates these choppy waters, forgive the pun there, for the market in shipping goods. And so this is one way, this is one opportunity I see with ZIM in a tough market. I don't see the market rebounding in 2024. In fact, worldwide GDP is expected to slow down from the growth rates in 2023. And so that is going to put even more pressure on sales and transports of goods. So on the top line revenue sales side, I don't see that rebounding anywhere near, prior year levels for ZIM, but I do see an opportunity for ZIM to reduce costs, to return these vessels, become more cost effective, more cost efficient, and thereby return to profitability and return to better cash flow levels. So there you have it. That's the big news, the huge news that came out from ZIM Integrated Shipping. Did you know that over 90% of the views I get on my channel are from individuals that are not yet subscribed? To help keep this channel alive, let's try and get 10% of you that are not yet subscribed to click that button. Remember, the YouTube channel cannot survive without the support of viewers like you.